Hello, my name is Guy Costin, founder CEO of Dakota, and the Dakota Way is officially live on Amazon, where you can buy it right now, both Kindle and soft copy. The Dakota Way covers the 4 core principles of investment sales, which is 1, set expectations, 2, know who to call on, 3, know what to say, and 4, have a killer follow-up system. These are our internal nomenclature for how we describe the things that we should be doing to become world-class fundraisers. It's all in the book. It's incredibly simple, which is the good news. You can buy it on Amazon. I promise you it works. And if you have any questions, you can always email me at guy@dakota.com. The book's available at Amazon right now, both in Kindle and soft cover. Thanks so much and have a great day. What is up, everybody? It's Guy Costin, founder and CEO of Dakota. Welcome to episode 36 of the Emerging Manager Growth Show. So thrilled to have you join us, joined by our president, Dan DiDomenico. Dan, thanks for joining.
Thanks for having me here.
Yeah, welcome.
Exciting.
So as everyone knows, Dan, we always talk about, we do the EMG show because we want to talk about how can you get more with less, right? If you're an emerging manager, you don't have the resources, and we're going to share some ideas. We always share things that we're seeing, things that we do on a daily basis. Now, before we kick it off, so I did write the book, The Dakota Way. If you'd like a signed copy, simply email me at guy@dakota.com, GUI@dakota.com, and I'll send you a signed copy. So, and it's the 4 core principles of fundraising. And I think people really love it. It's a quick read, but packed with insights that we apply every single day. So, Dan, as you know, this week I was in Denver, and we've been doing our luncheon series, which is really fun, cities across the country. And if you want us to do a luncheon, it's roughly 10 people, all fundraisers, sitting around at a really nice restaurant talking fundraising, which is really cool.
Yeah.
And
Great format.
I think we've done 5 so far. They've been world-class, and just the insights that have been shared. You know, Dan, one thing that I do want to share that came up at our luncheon in Denver, the theme kept coming back to sort of AI, utilizing AI in like making all your emails perfect in this whole thing. And what really came through was feedback that people were getting from allocators saying, look, if I ever get an email from you that looks like it's AI generated, you're like off my list.
I believe it.
So,
well, it just lacks that human touch, right? It just lacks that the warmth and making it personal. I think that's a huge part of getting the response that you want. Is how can you make it personal? Because people that receive that email, they want to see that you put some time and effort into it.
Right.
They want to see. They don't want to see it being auto-generated. This is why, I think we're going to get into this notion around just mass emails. Right, I just don't think if you want to get somebody's time and attention, those mass emails just really are not going to work for a one-on-one, if you're trying to get a one-on-one meeting.
Yeah.
I know you're also, and we were talking before the program about your time in Denver, talking with a team, sales team, varied experience from those being very tenured, those just getting started, and still just this philosophy around how to get a meeting. Maybe just share with us a little bit about those conversations. I think that feeds right into what we're talking about with I think it's really interesting, the AI generated emails. And if it comes across just too clean, too perfect,
right,
it just lacks that warmth.
Yeah,
connection.
And I think the theme from the luncheon was really this concept of authenticity.
Right.
And how do you compete in a world of AI it's actually becoming more authentic. And I think what people struggle with is that this is a bespoke business. Right, meaning this is a hand-to-hand combat business. There is no magic pixie dust. There's no mass emails. Because one thing I had to debunk with the team, these are amazing people, and a lot of times some of the senior people talk through me so we can communicate with the younger folks to understand that you send mass emails to invite people to things, or you send mass emails to share a document, right? Share some insights in a white paper. Beyond that, everything else needs to be individual emails, and getting in these email sequences and outreach, and meaning those we know those tech tools that everyone knows what that is, right? When it's auto-generated, especially if it has an emoji. I mean, oh my gosh, did the feedback when people say,
I can't even.
Right? I mean, if you're putting an emoji in there and it's actually you, okay, that's a thing. But individual emails to do cold outreach and being very specific about it.
Yeah.
And that's the only way in, right? I'm not waiting for a referral, right? And so we talked a lot about that, of just the thing that really came across, the thing when I have these conversations, is everyone's like, do I really have to send 20 individual emails a day to book meetings in cities? And the unfortunate,
yes.
but you have to get over this feeling of feeling sorry for yourself, right? And we do it all the time, and our team, it's all our team does is send cold outreach. With the growth of the family office market, the growth of the RIA channel, I've never seen a business with more tailwind. Like, it's all the wind at its back. There's no headwinds towards the growth of that industry, because you have the banks and broker dealers that develop all these financial advisors. They leave, they hang their own shingle, they create an RIA, they build that RIA up to a certain level. Now there's so many companies out there that are the roll-ups that can now purchase you, and you have extremely high retention. You don't really have the fee pressure that long-only managers have. You don't have an index competitor, right? And people need financial advice. Yeah. So I think that those RIAs, but as professionals selling there, like, you have to be paying attention to the growth of this channel and all the new entrants. I mean, I think we roughly see 45 new RIAs formed a month. And remember, we take, as you know, the data team takes 250 from the SEC file each month. Then you have to curate it, get the junk out, all the stuff, clean it up, right? And you generally have about 10 to 15 new investment firm RIAs, and about 45
we see
new.
it, we benefit from it, we get the track and attempt to reach out. But to your point, it's the individual reach out. How do you create that relationship? That's what we're all trying to do. We're trying to create relationships. Yeah. And you're not going to do that just by sending out a very cold email that just doesn't have any thought behind it. You haven't done any research on them to figure out maybe where they went to school, or how it is that they allocate, or maybe there's somebody else there on the team. You're trying to find that degree of separation, right? And you're trying to get as close to them as possible. And you know what? It shows effort.
Right.
It shows that you research them.
Yeah, well, you just brought up a point. Like, one of the big wins that we heard this week, and I know our team does it, if you listen to a podcast of a due diligence analyst, right? You listen to something, and then you authentically listen to it, and then you authentically say, hey, Dan, hey, just touching base, I just listened to your podcast. By the way, I really loved your comments on XYZ. Yeah. Doing it authentically. You went in, took the time to listen to them, how they're thinking about investing, asset allocation, et cetera. And then, of course, you have, hey, and by the way, I'm going to be in Boston on May 14th. Can you meet at 3:00?
And isn't that the purpose of why I've always talked about those podcasts, doing the interviews, our allocator interviews on the DLC shows or Dakota Live shows? It's all about creating efficiencies for both sides of the aisle.
Right.
So listening, actually learning, processing what they're saying, so that when you are reaching out to them, you know that there could be a fit, or vice versa. If you went and you listened, you realize that they index everything in long-only equities, and it's probably not a great use of their time, your time, and reaching out to them.
Yeah, and I think what I learned by doing all these coaching sessions, people don't think the long game. And what I mean by the long game is, we talked about, and I don't want to name names, but we were raising money for Fund 2 for one of our clients, right? And as I said to you guys, we're not really raising for Fund 2. We're really raising for Fund 3, all this sales activity, because it's such a long sales cycle. We'll have gone to the final close, and then we'll be on to Fund 3 a year later. Yeah. And we're really tilling the soil for Fund 3 when you're marketing Fund 2. It's no different than sending a cold outreach email. So what I don't think people understand, and this is what I was trying to encourage them to understand, is that people use these emails as idea generation for investment strategies. Now, people doing cold outreach might not be thinking about it that way. Like, well, what do you mean, Guy? Well, it's like, you really think an RIA, due diligence analyst, spends 100% of their time diligencing strategies? No, they've revenue generating responsibilities with clients, right? It's a part of their job, not the full-time job. And what I mean, so they're limited in resources. I mean, as we're talking about the Emerging Management Growth Show, this is all about doing more with less, and the RAs are where you want to focus. But when you're doing it, understand there's a bigger game being played. There's a bigger game being played where you are building brand awareness for your company by sending those cold outreach emails, by saying meeting request in the subject line with a date and time, with a very clean 1 to 2 sentence intro. Now, if you can chuck in, hey, I was reading your newsletter and I found it fascinating that your view of the markets, or I listened to a podcast that you were on, that's an enhancer. That's the next level, right?
Yeah.
Then with a clear call to action. But my point is, we know they get those emails and they drag those into their Outlook folders based upon your asset class. Now, if you're not clear who you are, what you do in your asset class, then where do they drag it? Right.
Yeah,
So
you're making them do the work.
right. But remember, they're taking you are literally sending people emails so they can generate ideas and catalog ideas for future reference.
For sure.
Right. And that's kind of like my point. It's like, you might not get the meeting. And by the way, you might have to email them 3 or 4 times. Shoot, it could be 8 to 10 times.
Yeah.
But it just might not be the right time. And it doesn't mean that you should stop.
Correct.
And I've seen, maybe we just want to talk about, is what I try to encourage everyone in Denver. The most valuable player at an investment firm on the IR distribution side is the person that books the most meetings.
For sure.
Right?
Yeah. It's creating that activity. It's giving you that opportunity to create the relationship. But to your point, and I think if you just carry the right mentality about it's not going to be transactional, it's not going to be likely in that meeting that they are going to be stroking that check to invest in your strategy.
Yeah.
But just knowing that you're going there just to build your brand. And over time, we know that by constantly doing that and having more in the pipeline, more of that type of activity, good things is going to happen over time.
Yeah. So,
but it takes time.
And that's what I was, because people asked me in the meeting in Denver, they're like, hey, do we send mass emails to book meetings? And I'm like, no. Like, it has to be bespoke, and it has to be.
If only it were that easy.
Right, exactly. You really have to gamify it, right? Because we always talk about, you always want to be scheduling for 5 cities, and you always want those times that you're scheduling for to be circled. So 9, 11, 1, 3, and 4:30.
Yeah.
Right, and you have 5 cities. That's 25. Things that you have going on where you can plug.
Yeah, it's an incredible discipline to have, and as soon as one travel day, the one day of meetings in whatever city it was, as soon as that rolls off, you need to have the next one on.
Yeah.
Because it's so easy. You can find yourself going through that exercise. You get through setting up all those meetings. Next thing you know, you're following up, but then you don't have that next set that you've been scheduling for, and you're behind.
Right.
So you just really want to keep into that rhythm.
And this is the whole point of this show, right? And we're just having this discussion because we talk to so many emerging managers who are trying to figure it out. There's really only one door to go through as an emerging manager. Go to the RA channel, right? And be doing your cold outreach and do it city by city. Typically roughly the top 14 cities have about 50% of the RAs.
Yeah.
And then if you focus on those top 14 metro areas, you can kind of guess it's going to be Boston, New York, Philly, San Francisco, LA, Chicago. Right? Those are the cities that where you just have to focus there. And as I said to the team, I said, look, at the end of the day, success is not about raising money. Success there is account coverage. How can I look 3 months in, 6 months in, 9 months in, 12 months,
Progress.
2 years, and how am I doing against these cities? How many RAs know who we are? How many have I gotten in front of? What's my penetration rate there? I mean, it really is a true business coverage play, because then you get in, as we know, it's a consultative sale. Mm-hmm. You're not going to make the sale in the first meeting. You're educating, you're consulting, you're de-risking.
Yep.
That's like the whole game now. So,
I find it to be fun. That's the fun part of the business, right?
It is the business, right?
It is the business. I find it to be very fun just to see how that progresses, that penetration rate, as long as you're showing incremental progress against what we all desire, which is having 100% coverage of the RAs, the multifamily offices, especially in those key cities. But it's the fun along the way is just seeing how many that it is that you can connect with, form that relationship, get them to some stage of a pipeline, and then watching that through all your follow-up and then the repeat visits to those cities. The first time's the hardest. And then the next time it's a little bit easier. And then just incrementally, you're making progress, and then you have those relationships in the city. And it just becomes that much more significant for you in the pipeline. And as you look back at the progress over a 12, 24, 36-month period, right now that it becomes a living, breathing organism, that pipeline. Yeah.
So one big question we get from the audience a lot is, hey, it's not working. I sent 50 emails, I didn't book a meeting. Okay. So what I've always said, we've
all been there.
Yeah, we've all been there. But what you really have to do is you got to examine the emails you're sending. Right, because you got
so true.
right, and we always recommend. By the way, it's in the book, and you can buy it on Amazon, or I'll send you a free signed copy. Dakota.com. You have to have the subject line say meeting request, because that's what you're trying to do, date and time, so people know. They open it, say, okay, what does this person want to meet about? Then you have to be thoughtful in those 1 to 2 sentences. As we said, it would be nice to reference something that you know about them, or just simply make sure they understand in 1 sentence who you are, what you do, and why they should care.
I would just add something about them, maybe something about their peers, like a trend that you're seeing within like organizations. People love to hear that as well, because sometimes they get trapped into their day-to-day life. We all have our bubble. To bring them something of relevance that's going on in the market, something that you're seeing as a trend amongst their peers, it's valuable information you're bringing to them. What are you bringing to them that could be valuable to them?
Right, and what you're getting at is that this meeting scheduling, you have to commit to it, but it's basically, it's an art form.
It is.
And because you got to be tweaking, and you got to be changing, and you have to be doing things. So if you're sending 50, right, and you don't give up, okay, because we've all seen it work. It's the only way through the door is you got to keep doing this, but you got to tweak, you got to change things up. Then you always need a clear call to action. Can you meet May 14th
Absolutely.
At 3 o'clock?
Absolutely.
You're going to be in Boston, you're going to be in New York, what have you. Don't make them do the work. As I said to the team in Denver, I said, I don't want to be insulting, but I'm going to tell you how I look at this. If you don't do a clear call to action, you say something like, hey, I'm going to be in New York the week of May 14th. I'm going to be there the month of May. Do you want to pick a time for us to meet? What you're asking them to do is do your job for them. So you're asking them to go to their calendar and find a time to meet with you so you can sell them your strategy so they can give you money. That's just not polite. Right?
It's not.
Yeah, you do the work.
I'm sure you get a lot of emails like that too.
Yeah.
Right? We receive these types of emails, and you look at them and you go, I get frustrated by them. Like, we're so wired this way now. You get insulted by it. Like, I'm not going to respond to this.
So let's talk about brand building for a boutique investment firm, an emerging manager.
Yeah.
We just stated that sending the emails consistently and politely, respectfully, on a consistent basis builds awareness for your brand.
Yep.
Whether you get the meeting or not, it's still building awareness. It could be you're going to get it on the 5th time, the 6th time, 8th time. Now, let's talk about the greatest free form of marketing and building your brand, which is the quarterly webinar.
Yeah, it's huge. It's such a great means of communication, number one, right? Because you're now at a minimum on a quarterly basis, you're going to be creating the content, delivering updates on performance. You're going to be going through just Outlook, right? And it's just great content. But the biggest benefit that you're going to get from it, I think this is what you're driving at, is that at a minimum on a quarterly basis, they know they're going to be receiving that email from you that's going to have an invitation to join, or if they can't join, it's going to give them the opportunity to receive the replay. And that's just a consistent email communication. And then ultimately, if they are able to join those webinars, it's a way for them to connect on who you are, what you do, and they know that from, let's say they were to invest, right? They want to know how they're going to be serviced as well.
Oh, that's okay. It's point number one. It's an audition.
Right.
No one thinks of the sales process as an audition.
Right.
No, it's an audition.
Correct.
And you have to show your strengths.
Mm-hmm.
You got to show them this is what it's going to be like to work with us if you give us money.
Right.
We're going to be communicative. It's like I don't want to name names, but one of my favorite Greystone consultant relationships, right? Each quarter we send a paragraph.
Yep.
Right? Hey, and then he takes that paragraph, what happened during the quarter, puts it in a Word doc, sends it to his clients with all the other commentary. We're doing his job for him. Yeah. Do you know how many people just send the deck and make the consultant, make the RA go figure out what happened during the quarter?
Yeah.
And they have to do all that work?
Yeah.
And I was just with a consultant at AMZ interviewing her on stage. She goes, it's like the most insulting thing. So a quarterly webinar is showing, number one, this is what it's going to be like to work with you. Number two, people don't think, oh, they're going to take that quarterly webinar and they want to be able to share that information with their client. But no, what you're going to do is you're going to send the recording of the webinar, you're going to send a transcript of the webinar, and you're going to send an abstract, key 5 data points and takeaways from the call.
Yep.
So they can then actually just take that and use that to communicate with their clients. So it's actually, the quarterly webinar is actually a client communication tool for your investors. Yeah. And it's also a great prospecting tool for you to know, hey, this is the audition. This is what it's going to be like to work with us. And so Ironically, everyone, if you're watching right now, that just happens to be right after we shoot this, our team from Edgewood Management is going to come in and they shoot their quarterly webinar right here at this desk with all their branding. I know it's not for everybody and it's a big lift. Thank goodness we have this studio. You can come in and shoot. We'd love to have you. But the clients love
the feedback is off the chart. Off the charts. Right, not only just from the delivery of the information, the content that they get into, the information that they're sharing, but they do it in a way just like this, right? Where it's a lot more conversational. People get a lot more out of that when it just comes across as this being natural and it's a flow of what's relevant not only for the portfolio, but what they're able then to digest, process, because ultimately where's that information going? It's going to somebody else, right? They're hearing, they're listening, they're processing, they're taking the mental notes or physical notes, and they're bringing that to their CIO, they're bringing it to the director of research, or they're bringing it to their underlying clients. And it's just a much easier way to consume that information.
And we always put in the show notes of every EMG show, we put in the ebook on how to do a quarterly webinar. So even if you're not be able to take notes right now, you're just listening, you're on the road, we will have it in the show notes. I mean, it is table stakes to do a quarterly webinar. And like I said before, number one, you're auditioning. That's very important. Number two, you're servicing your clients by doing this, because then you're actually giving them information for them to communicate with their clients. Right? I mean, you got to be doing their job for them. So if you're an emerging manager, number one, as we said, you got to be doing cold outreach, 5 cities at any given time against the RA channel, because that's discretionary capital. That's where you win. That's where we've won for 19 years, for me, really since 1997. And then you got to be doing your quarterly webinar. Those are the two areas: consistent cold outreach to RAs, and then secondly, the quarterly webinar. That's really
quarterly webinar. Servicing your clients. I think it's core and essential to servicing your clients, but it's also free marketing. And it's a great way to continue to build your brand and market the strategy.
Yes. And so when you're doing the emails, there's no mass emailing, right? It is just the bespoke, onesie, twosie, direct, being authentic,
be
being
warm,
very clear.
Be authentic, be genuine in those emails, for sure. Those are most effective. And call to action. Make sure you have the call to action.
And then, so Dan, as we're kind of wrapping up, today the theme, we really wanted to get at some of the key takeaways from my trip to Denver, interacting with the team. One theme also that I tend to see in these conversations is people want the easy street. They want the, they want the easy button. It's like, because it's laborious, right? But look, there's a lot of money to be made and a really successful career if you're willing to commit to the cold outreach. And so part of this is a little group therapy, right? We all have to do it, but it's really, really important. The emails are critical. We've really gone through that. That's going to be in this. I just want to make sure we're covering everything that we said we wanted to. And then Dan, let's just talk about some myths in the remaining time that we have just about flows and wins, because I'm seeing, our team, right, against some really unbelievably good strategies that we market, winning really chunky allocations. But a lot of this has been a lot of time and energy, right? Longer sales cycles, getting out, doing the cold outreach, introducing the story. I had a conversation with some people at Dakota Cocktails in Denver, and they were talking about, well, we really shouldn't be selling, and it's just like relationship building and the whole thing. And I said, it's funny that you say that, because I couldn't disagree more, right? And I was being kind. That's the kindest part, not just going to be nice. It's like, no, you actually are selling, because if you don't believe that your strategy, if you introduce it to an allocator, every single time that it doesn't have the ability to add tremendous value to their career and their portfolio, then you shouldn't be marketing it, right? You have to believe. So it's not so much selling, is that you just want to make sure you're able to introduce the strategy so they can get it. Because if you don't believe that it's going to add tremendous value to their portfolio, then why are you in the job?
And I wonder if people sometimes get confused when we talk about relationship building or taking a consultative approach to a conversation that you're going to have with an allocator as not selling. It's still selling. Like, you still need to be in that meeting, positioning the strategy so they understand what is the value that your strategy adds to a portfolio. What are the performance expectations set against different market environments? That's what we do, is that we're trying to paint that picture, the role that you're going to play in a portfolio. And you can do it in a way that's not necessarily just pushing a fact sheet, selling performance. That's not what we're saying. We're saying the consultative approach that you can take is by delivering them meaningful information so they know who you are, what you do, and what to expect from the strategy in any given environment.
Yeah,
and you can do that in a way that's not, if people confuse that with, if that's too salesy, like that's not, in our approach.
It's educational.
It's education.
Yeah.
That's right.
And the other thing is every word out of your mouth, right, has an opportunity to increase the risk in their brain of your strategy or decrease the risk. The more knowledge they have about the process and how you actually get to, right, doing due diligence on different companies that you might be investing in, and it could be public or private, or whatever it might be, real estate, what have you, going so much deeper into that process so they can begin to see, wow, like for instance, the real estate firm they're working with right now. What's very fascinating to me is that you have a very healthy market in New York City, a very healthy market in Dallas, but you have this massive capital structure disruption, right? The capital markets are disrupted in real estate right now. Lenders are giving back, right, properties. And so there's ridiculous opportunity, but they are able to go so deep because they're such a local operator, they understand the underlying. But if we don't spend the time, or they don't spend the time peeling back the onion, educating, explaining, going deeper, right? We're not even talking about performance, right? Then they're able to say, okay, geez, these are the types of people that I want to be in business with. Thank goodness we have always marketed strategies that have, great depth of understanding of what they're investing in.
Specialists.
Yeah, specialists, and telling those stories, that's what people want to hear.
Yeah.
Right? They want to hear exactly how and why, like, are you getting there? What are you doing? And the more you talk in detail, not about what are they going to earn, right? How are you getting to really understand the underlying fundamentals of the asset that you're looking to invest in, whether it's a public company, private company, piece of real estate, right? A loan, whatever it might be.
Yeah.
So it's really that, I call it the de-risking conversation of the process.
And always tying it back to the process, right? And as much as you can get into talking about the different market environments, you can talk about real estate, especially on a very local level, they always do a great job of tying it back to the process. And that's how you're creating the brand and who it is that they are, their full capabilities. That just creates trust. It creates this feeling that they are the specialists within the category. So when a search does come around, we feel pretty good about the fact that we'll be in the mix.
And this is how an emerging manager can compete. Right, and it's free. I mean, all the stuff that we're talking about doesn't cost anything. Sending cold emails doesn't cost anything. Inviting people and creating a webinar doesn't cost anything, so you can do more with less. And then being extremely thoughtful about your comments when you actually get the meeting and showing your depth costs nothing. But that's how you can distinguish yourself. Because potentially at a bigger company, you might not have that depth. I'm not giving bigger companies a hard time. I'm just saying we're here to talk to emerging managers on how they can compete against, the IBMs of the world, if you will, and that's how you do it, right? It's your cold outreach, it's your quarterly webinar, and then when you're in the meeting, getting that depth and understanding so you can really deeply understand who you are and what you do.
Well said. Exactly.
Great. So, Dan, we in the show notes we're going to talk not in depth right now. There's a lot of detail in the show notes just about the consultants, the emerging manager platforms that you can be on. There's a lot of detail in the show notes that go through. It's an absolute channel. If you are an emerging manager, you want to make sure you're in front of.
Without a doubt.
Right, and just make sure you've introduced yourself. These are much longer sales cycles. There can be a lot of fee pressure. So, but it's absolutely something because it gives you a nice little catalyst.
But by the way, we're seeing the institutional consultants converge with the RIAs, the multifamily offices, some of the larger platforms, the aggregators of RIAs, they're acquiring consultants to bring in their capabilities to help with the research, the manager due diligence. So it's a massive channel in and of itself, but the influence is now expanding into the RIA multifamily office universe. It's a must to be in a conversation, have full coverage of those consultants.
Yeah, and Dan, what we're coming back to is you're talking word of mouth. Right, so if you're in with 20 of the emerging manager consultants, they know who you are, what you do. Even if you don't get an allocation, right, they know who you are. Correct. And they will talk about you to their industry colleagues, right? So the bigger game being played here too is that you just want to be in the conversation with as many potential allocators as possible because they all share ideas, they all talk, right? The more activity that you're getting in front of these qualified buyers. Now, we're not suggesting activity for activity's sake or calling on people that you shouldn't be calling on. That's nonsense. What we're talking about is We know RIAs are looking for new and interesting investment ideas, calling on them, calling on, in the show notes, all of the emerging manager platforms, just to make sure they know who you are and what you do, that you're on their radar, you've done calls with them, because now so many RIAs are hiring these consulting firms. We're obviously seeing acquisitions of these, and you're just going to continue to see consolidation, monetization, everything. Playing in traffic, being out there, building your brand, building awareness is, and this is why we do the show. We're imparting the knowledge what we think you should be doing and you can be doing without, and I say with no cost. I understand there's a little bit of cost, but we're not suggesting spending money on advertising or any stuff like that. This is stuff that you can do that costs almost literally nothing.
Yeah, we didn't get into it, but along those lines of the acquisitions, which is why we call on all of the RIAs. We don't disparage necessarily by size, even though obviously we all want to be in front of all the large ones. But the smaller, the mid-size RIAs, they're fantastic because maybe they're less trafficked in, but they also could be a candidate to be acquired.
Yes.
Right? So if you form that relationship and all of a sudden one of those big RIA aggregators gobbles them up, brings them into the larger ecosystem of this larger, we refer to them as almost platforms of RIAs, now you're getting exposure to a much larger group of RIAs.
Yeah, don't. My advice is don't fall prey to that, I'm going to draw the line at $1 billion, right? Because 990 million is not good enough, and they need to be exactly $1 billion or more. I mean, that's crazy town, right? Money's green all over. And just to close, we have the Emerging Manager Conferences in the show notes. There's always a bunch of really good conferences that you can go to, and you can sort of hunt and peck. Sometimes you have to pay, sometimes you don't. You can kind of be there around the conference, maybe not go into the sessions and just network. Definitely a good use of time. Those will be in the show notes. The show notes are extremely detailed, as you can see me peeling through. Really strong. So,
and when you go to that city,
book meetings.
Book meetings.
Exactly. So there's another good point, right? Hey, I'm going to be at a conference in the city, and then go do the meetings, right? And we always recommend you go 3 weeks out to do your cold outreach. Send a second one. If you really have the guts to do it, follow up with one voicemail. Hey, I'm going to be in town. And don't be afraid a day before or day of, hey, I'm actually going to be in your building, right on the 3rd floor, meeting with such and such. I'd love to come by for 10 minutes and introduce myself. That's absolutely fair game to do that. So,
for sure.
Dan, thank you.
Thank you, Gabe. It's been great. Always great conversation.
No, I love it. We could do this all day long. We love talking distribution and fundraising. So with that, that's a wrap on episode 36 of the Emerging Manager Growth Show. We can't wait to see you on the next Emerging Manager Growth Show. Hello, everyone. I just wanted to say thank you for watching the Emerging Manager Growth Show. I hope you got a lot of value. And I think, as you know, we shared an enormous amount of information about metro areas and other type of information, RIAs, etc. All of that information exists in Dakota Marketplace. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.